Thank you for joining us. Today, we're excited to bring you a brand new show from the Onramp Media umbrella. Wake Up Call is a weekly show that will be streamed live on LinkedIn every Monday morning. To catch the premiere of each episode, follow Onramp's LinkedIn page and add Wake Up Call events to your calendar. After the live premiere on LinkedIn, we will distribute each episode across Onramp Media's podcast channels and YouTube page. Wake Up Call aims to educate financial professionals on the merits of the Bitcoin investment thesis, how this asset represents both a threat to legacy financial service businesses and an opportunity to differentiate oneself and retain and attract new clients. Hosted by Mark Connors, Onramp's head of global macro strategy, and Rich Kerr, Onramp's president of managed wealth, this show seeks to provide financial professionals the wake-up call they need, prompt them to have an open mind with respect to Bitcoin, rethink their prior assumptions, become more educated on the topic, and learn from others who are already farther down this path. Mark and Rich bring a combined 60-plus years of experience across traditional markets and financial services, and will share their unique perspectives in how their peers and colleagues can approach the realm of Bitcoin. Wake Up Call will feature guests from various backgrounds and industries who will also share their own journeys to Bitcoin and how others can get up to speed. Now, time for the show.
Well, good morning, everybody. We are live with the Monday morning Wake Up Call, and we've got a great guest today. We've got Paul Scudellari, who is the founder of RIApex, forgive me, Paul, which is a business consulting firm out on the East Coast, and they represent a number of registered investment advisors and helping them solve all sorts of problems inside of their businesses and unlock potential that lives inside of those firms. And so, Paul, we're delighted to have you, but before we kind of kick over to you, just also want to, mention that Mark just got back from Jackson Hole, Wyoming, where he was spending the week at the Wyoming Blockchain Council Summit, sponsored by Salt and Kraken, and that was the place to be last week, Mark. You had not only the Blockchain Council Summit, but you also had the Federal Reserve Symposium that was there, which had quite some very relevant information that was shared by Jerome Powell that's relevant to our guests, or not just our guests, but our audience here today. And so, Mark, maybe I'll throw it over to you to just hear some of your observations that you took away from the past week, and maybe Paul and I can rip off of that a little bit.
Yeah, it was a great crucible for what's going on, both on the macro environment, like you mentioned, Rich, as far as interest rate guidance, which everyone seems to be waiting for information to say, please lower rates, make life easier, which we'll touch on because that's not really the panacea for anybody, including the advisors out there or their clients. And it was a bit of a little brother pulling at the trousers of the big brother by having the Digital Asset Summit just right next to, the multi-trillion-dollar, 800-pound gorilla in the room, the Fed, having their annual Jackson Hole Summit. So the folks at SALT, part of Skybridge, Scaramucci's outfit, did a great job getting just 200 people out there. We spoke about macro. Obviously, you had folks, Wyoming natives like Joe Ravel, former Citadel, now out there with a entrenched digital asset and traditional trust business, bringing people over, like what we're going to have Paul talk about today, about how to maybe get folks dipping their toe into the Bitcoin world. And yet people like Caitlin Long, who's a juggernaut when it comes to banking and Bitcoin and trying to get a seat at the table. And you also had folks like Onramp there who are speaking to folks about how to hold this thing. So it was well done. And again, I think we'll look back on this in a few years, and we were at the kids' table.
We seem to be having a little bit of a connection issue.
Oh, okay. Is that still there on the connection side?
Yeah, I think we had a little bit of a connection issue there with your final comments, Mark. But
how does it sound now? I want to make sure you and the Fed are hearing me about my comments. Is
I
it
think
thumbs
the
up or
Fed
thumbs down
interrupted
right now?
our, yeah, I think the
Okay.
Fed interrupted your comments.
They
But
totally don't the reach, right? The reach from the Federal Reserve goes deep into the cost and the supply of money. So we'll leave it with that. Um, what we spoke about was the trenchant adoption of Bitcoin, and Rich, you and I and Paul were talking beforehand. Is what they said, which is that we're ready to lower rates, is what everybody. That's the only thing that came out that really people don't care about what we said because we're going to tell them what they should listen to about Bitcoin. But out of Wyoming, the Fed said what happened in March and caused bonds to go down by 30-40% on price basis and caused the banking crisis of March 23. He said that's over. We're now pivoting back to accommodative. That's the biggest news. And the other one, which surprisingly came at the same time, was that revision of jobs, which was over 800,000 jobs were revised
okay, yeah.
lower,
Let
Rich.
me let me hop in here, Mark. I think you're struggling a little bit with the technology side of this live stream, so forgive me. But this might be a great chance for me to talk a little bit about our guest today. So, Paul, thrilled
Yeah.
to thrilled to have you join the show today. 25 years working within and around supporting the registered investment advisors. Whoop. Hey, Mark.
Yeah, I'm
Yeah,
out.
we lost Mark.
Yeah.
Yeah,
It's a
that's okay.
shame.
We'll continue on here. So one of the things I was that really strikes me, Paul, about your background is not only have you worked inside of an RIA and have done that for a number of years, you also spent significant amount of years working, in the custodial side as a senior relationship manager. You've worked as a wholesaler into registered investment advisors, but you've
Yeah.
also flipped the lens and launched your business consulting firm and working with RIAs to help them, through a myriad of challenges that they're trying to resolve.
Yeah.
And one of those areas that I've always been impressed with you is you've got such a multi dimensional lens around looking at problems and trying to find the right solution. You're deeply aware of the cultures that live
Yeah.
inside of in the various cultures of registered investment advisors, and you have a real perspective around growth and differentiation in particular. And in my mind, if I'm a registered investment advisor, your sets of experiences are absolutely amazing. So I just want to say we're delighted to have you here today to talk a little bit about Bitcoin, and more importantly, talk about why registered investment advisors might want to be thinking about Bitcoin.
Sure.
So
Hey,
welcome.
welcome. Hey, thanks for having me. It's a pleasure to be here. You guys have a great cast, and it's going to be fun to talk to you. And hopefully, we get Mark back. Yeah. So, yeah, you covered it pretty well. Since the very beginning of 2000, I've been spoiled basically working in the RA community. Great people. They have a great business model. They do what they do for their clients for the right reasons, and that's kept me really involved. And I retired from Schwab 2 years ago, and I got my consulting practice off the ground. Um, for me, as far as the advisors, it's hard to say what they're doing wrong, right? Rich, they've grown fabulously over the years, strong growth. I will say though that the one theme that I've heard from them over the years that's never really gone out of it's never not been a hot topic is they all seem to at some point struggle with consistent organic growth. And so when I left Schwab, I said, my consulting practice is going to really be anchored on that as a business issue that we're going to solve. And so I have a program in place that I'm working with firms that really helps them figure out, where is this organic growth and how do I harvest it more regularly? And the funny part of it is the growth is sitting there as a paying client. They're already at the firm. It's just a matter of culling through the clients, figuring out which ones are really wired in a way that they would love to promote you. But to do that, they got to know you better, not just as an advisor. They need to know you as a person. So that's my little advertisement for our RIApex today. But as it comes to Bitcoin, hey, Mark, you back?
Sorry, folks. All set.
No problem. I'm starting to lean into Bitcoin here with Rich and now you, thankfully. So when it comes to the advisors and why I enjoy working with them so much, it has to do with their ability to really always try to do the right thing for the right reasons. And but they have certain commonalities across them. It doesn't even matter what size of their firms are. They're very deliberate, right? They tend to be very conservative, and they tend to really take their time to explore the benefits of maybe a new solution for their clients. And that has served them extremely well over these years, right? But I'm going to say right now, I think it's a headwind against them when it comes to the adoption of Bitcoin for their clients. I think we're at the point now, and I'm going to tell you my first Bitcoin story, my first experience. I had just left Schwab in 2011. I was two-time Schwab, my first time leaving. And I was an RIA, and I went to Schwab's Impact Conference in 2012. And I didn't have any duties as a Schwab employee, so I was bouncing around different educational sessions. And I happened to go into this thing called talking about Bitcoin. And I don't think I even had heard the word before. It's 2012. And I gave it a good 10 minutes of my time before I decided I didn't want to become extremely wealthy. And I walked out the room. And I think Bitcoin was trading around $15 then.
Paul, what was the thing that didn't catch you versus now?
So again, I was born in 1964. I'm not very technical in nature. And whatever they were talking about, I probably wasn't, making a lot out of it as far as sense. And I figured, here's a great scam somebody's come up with. And so I left, and you would think maybe I would have done a little homework after that, but I think I can honestly say I did not change my opinion on Bitcoin until 10 months ago.
Wow.
Now that's what I think a lot of folks that were born in the 60s or earlier or 70s, they're suffering from this inability to see the forest for the trees, right?
Yeah.
And go ahead, you guys kick in a little bit, and I got some things. I have 3 things that I would love the advisors to consider before, after today, and I think it'll help some of them maybe at least know that they did their due diligence. Go ahead.
Yeah, well, I was just going to say, Paul, on my end, and then I'll kick it over to Mark, that we all have that story. We all have that story where we've come up through traditional finance channels, mine through, 30 plus years at Schwab. And yes, I was born in the 60s as well. And so, I remember the same situation. I had an individual come to me and ask me if they should put some of their their assets in Bitcoin, and that they were very serious about putting a sizable chunk into it. And this was 2017, and I just immediately dismissed them out of I think an arrogance in some way, thinking, okay, well, wait a second, this just sounds wonky. I mean, everything about it is a little bit unusual. It's not traditional. There's no issuer. I don't understand it. And so rather than say I don't understand it, I said, no, you shouldn't do it. And you should be a little bit more disciplined in asset allocation and diversification and, the whole 9 yards. And basically told them every reason why they shouldn't do it. And I felt terrible about it because it violates, it violates everything that a good advisor would do, which is to actually have an informed opinion or if they don't, be able to disclose that confidently. And that's okay. That's okay. But, it put me in a place of action, Paul. It made me want to
Right.
start getting into a movement of understanding what this is. And I finally, became an investor myself in 2020 after doing all of my work. And once you do your work, you realize, oh my gosh, this is such a unique technology, and the capabilities continue to be rounded out through open source protocols, and people coming to it, new people coming to it, and improving and evolving the technology and the asset itself. And to me, I just think it's I think it is as big of a disruptor to traditional finance as the registered investment advisor themselves were over the past 30 years. That's how significant I see it.
Yeah.
And the parallels between what registered investment advisors are in this industry, um, and what Bitcoin is globally, are striking. Right there's so
Hmm.
many altruistic natures that are embedded, so many principles that are embedded that empower people, and it's why transparency, empowerment, all of these things that live inside of a solution. And to me, I think that it's a match made
Rich,
in heaven,
can
to
I
be
jump
honest
in
with
on
you.
the on the
But
on
Paul,
the back of
Mark, go
that
ahead.
point about the
Yeah.
disruptor, which I love, because that's what RIAs want to be, as Paul's noted. And Paul, I'm going to link this
Hmm.
to your 3 points, hopefully, is when you talk about disruptors, disruptors solve a problem. Too often you see some folks in technology provide a solution when there's no problem. And, that means they're early or they're fakers or whatever. But
Hmm.
you look at one disruptive element that our RIAs had to contend with, and that's the ETF, which has been a bananas grower and disruptor to the mutual fund industry, ripping out a lot of financial revenue for legacy firms. And I'm going to say that that vehicle, the ETF, the has been the onboarder for Bitcoin to a lot of the retail and mini institutional world. So you're looking at, I think people don't understand Bitcoin, but they understand ETFs, and they're digesting more than they understand, more than the opportunity to even appreciate, I think, sometimes, because of the vehicle, meaning it was a familiar wrapper, the ETF. So what we're trying to do here is expand people to say, yes, ETF was great. Bitcoin is even more than you likely appreciate, not to talk down to people, but we understand that the vehicles can do it. So when we look at what has happened this year, Paul, and you coming into this in the last 10 months, where is the
Right.
opportunity? Is there still an opportunity for RIAs? And what were those 3 points you were going to bring up?
Yeah. All right. So this is what I got, and I think this should be enough for most advisors to maybe, if they haven't already, consider just performing some due diligence. Right. Feel good about you're wanting to start to introduce this as an asset class to your clients, or you feel better that there's no need for that. So one is that, and again, I'm a newbie, so I'm starting on these things. I don't have to go back far to when I first realized these points. So Bitcoin launched early January of 2009, right? The blockchain technology, and it has yet to fail in any way, and it's never stopped running. So let's think about a company or two out there that are worth trillions in market cap, maybe a Microsoft. And if they had never failed any other technology, what would they be worth today?
Yeah. Unbelievable.
Amazing, right?
Yeah.
They're
That's a
already worth
that's a
trillions. Maybe they were worth
fascinating
tens of
observation.
trillions right now.
Yeah, fascinating observation, right? And even you look at any financial services for downtimes and things on that nature that disrupt the client experience, impact the revenue, creation for those companies. It's just it's amazing. That's an interesting observation, and you're right. Bitcoin has not failed. So I'm dying to hear point number two.
Well, I'll get there next in a minute, but along what we just talked about, as far as financial services online, downtime. I've got a good friend who got his master's in cybersecurity, and he was pointing out to me, because you wouldn't believe it, but every day, some of these firms online, and they're big names, are hacked every day,
Yeah.
and they just put the money's back into the accounts. So there's a lot going on that we don't know about, right? So I'm just pointing out a few things that are factual, and the next piece is the audit. So there's a Bitcoin audit done every 10 minutes or so. And it's not done by one person, one company. It's done by tens of thousands of computers worldwide. And every time they do the audit, they have to go back to the first transaction on the Bitcoin ledger and make sure it's all the same still. That is an astounding fact.
Yeah.
Hence, maybe why it's never been corrupted.
Yeah.
Paul,
Yeah, you've got tens of thousands, and what Paul's talking about is that there are, tens of thousands of miners and nodes that are participating in the Bitcoin network every single day and every single minute of every single day. And so, in order to produce a block, the common phrase is tick-tock, next block, and that's approximately every 10 minutes. That gets audited by every active node and every miner out there. And so, Paul, that's a great observation. I wish, when's the last time we did an audit on the gold holdings of Fort Knox, as
Or the
Rand
Fed.
Paul would say, or the Fed.
So it's amazing stuff, right?
Yeah.
The more you look at it, the more you're like, how did I not see this?
Paul, I just came at this the exact same way, which was not at the opportunity, which is like how it services other countries and, reduces the 8% fees for remittances, that people, that it's use cases. Mine was great. If I
Right.
buy it and I put 10, 20% of our net worth in it, whatever the number may be, and it goes south, will I, A, be unhappy? Yes. Will I be married? No. And there are other things. If I'm an RIA, will I have a business? So for RIAs, there's this thing called the trilemma, which is blockchain has to solve three things. A trilemma solves two of them very well, and the third one is incrementally added. It is decentralized, it is secure, and the scale or business cases are coming over time. But the point is, this animal has to remain integral for more programmers to realize, I'm going to get off those other, chains that are just really kind of wishes and solutions looking for problems. And so I love the fact that you vibe the exact same thing. It's like, wait a minute. In a growing world of complexity, and as you said, hacking, this thing is a silent hero, because
Yeah.
so I just, and the reason I belabor the point is it's worth the time to study it, because it's not going away, in our opinion. It certainly hasn't. It's a transparent bank that no one's been able to get into.
At Onramp, we believe that Bitcoin is the most important asset of the 21st century. The hard part is securing it right. There are shortcomings with keeping your coins on an exchange, but also with setting up your own self-custody arrangement. Onramp solves for these concerns. Our multi-institution custody solution maximizes security and minimizes counterparty risk, ensuring that your Bitcoin remains securely in your possession, and provides built-in inheritance planning to ensure your family is protected as well. Onramp provides peace of mind for your Bitcoin journey, whether for your whole stack or for part of it as a complement to your existing self-custody setup. For more information, check us out at onrampbitcoin.com.
Right. And by the way, 15 years, I wonder how many attempts there's been.
Yeah.
Quite a few. So my final point is really the I think it's the linchpin to the value creation of Bitcoin, in that it's a truly finite supply that I don't think could ever be changed. And then I'll kick it to you guys to talk about why it would never be changed based on the current participants back to the nodes, right? And the miners.
Yeah. Yeah. So you're hitting on the scarcity, right?
Right.
21 million Bitcoin will
Name me
only,
another financial asset widely used that has a finite supply.
yeah.
Even
Just
real
get,
estate, they just build straight up.
yeah. Yeah. I mean, it's just, it doesn't make a difference what you look at, right? The power of scarcity is, that's where the game is always, right? It's where the game is always at. And so it's impossible to deny the fact that 21 million coins have been created and it will only be created. And the reason why is, why would anybody this is just simple, why would I want to debase
Right.
my holdings, right? And if everybody has the equal participation, if you're participating as a node or a miner or whatever you might be, however you might be participating, would you want to debase yourself? No, you wouldn't. You have your ability to ensure that that code remains strong and altruistic in that sense. And oddly enough, for those who are listening in who may be on their own Bitcoin journey, right? There have been millions of coins that have been lost,
Right.
forever. And that's largely due to poor custodial care or hacks or, of individual setups, things on that nature. But that being said, the it's probably something more realistically like 17, 18 million, coins that are going to be in circulation forever.
Right.
So when you do the math, by the way, you look at the global population and you just divide that into the current number of coins that are actually that have not been lost, to people. Then you basically start understanding how significant just being a whole coiner is. A
A whole
single
pointer. Yeah.
Bitcoin, a single
Yeah.
Bitcoin.
Yeah.
And because all you have to do is divide that number by the number of people in the world, whatever that might be at any
So,
given point in time,
Rich,
and it's pretty amazing. So
yeah, Rich,
scarcity
on
matters.
the
Yeah.
scarcity point, I'm going to pull on it on the character of Bitcoin for a second, and then I'd love to throw it back to Paul about if people were to go back to their desk, RIAs, what are next? How does it fit in? So here's some nuggets. Some
Yeah.
nuggets are when we talk about scarcity. Gold is considered a scarce asset. It's outperformed every fiat since 1920. It's held value better than any fiat that has debased. So price of gold's gone up in dollar terms, yen terms, euro terms, everything. And gold, the amount of gold on the planet is has grown by 60% since World War II. Technology has accelerated the mining of gold. So even though gold only comes out at 2.5% a year, when the price goes up, more gold comes out, and that compounds at a big rate.
Yeah.
Bitcoin
Right.
the 19.7 million coins that are out there today will increase to 21 million or 6% over the next 140 years, 120 years. So I just want to put that in perspective. It is like gold. It's better. And then the last 2 points is one on the market side. Bitcoin was the fastest to a trillion asset in the planet. So that's the urgency point. It serves a lot of. It basically is being recognized for the points we brought up. So it's a reason to pay attention. It's around 15 years. It's over a trillion. It did it faster than Nvidia, Amazon, any asset in the planet. And then lastly, Bitcoin isn't just a coin. Bitcoin is more than gold because it has a little b Bitcoin that trades at 62,000 or 64,000, and it has a big B network Bitcoin, and that's what Paul was talking about. No other asset has both its unit of account, which is the coin or the say the dollar, and its own rail system globally that runs efficiently secure. That's the value proposition. And then, so I'll kick it back to you, Paul, about, or Rich, about as people go back, are there analogs to where they can say, well, this is just like private debt, or this is like CDOs, or collateralized mortgage obligations, or this is like what in the past? How would they go about incorporating this through an analog asset in the old days, or is there one?
Well, let me jump on this while I'm thinking of it. We spoke about how the RA business model and the RAs themselves have been a fabulously successful disruptor, right, to the old school way of doing finance and investing from the big wirehouses. And I don't think that's ever gonna. I think they've proved what they do is the right way to do it. But we don't want to see them get disrupted based on their lack of adoption to some degree of Bitcoin. Now, what I propose, and the advisors do, and they're a lot smarter than me, is just at least look at it. Take a look. I just gave 3 points that I think are enough to get you to start looking at it. And then there's so many reasons, and there's so much more as far as the information behind Bitcoin and the blockchain that it sits on. But they need to basically just decide, is this something that needs to be part of my clients' portfolios? Should I document that I brought this up with a client to make sure they're aware of the opportunity? They could tell me no, and I can document that. Or do I just keep on doing what I'm doing and what I did till 10 months ago and ignore it completely? Now, the disruption that could potentially come to them will not be a good one. The advisors have had the greatest, highest retention rate of clients probably in all of finance, in different business models. That can deteriorate quite quickly should the price at some point reach a certain level. We don't know what that is, to where everybody's like, where's my Bitcoin, Mr. Advisor? How do we not own any yet? We don't want to get to that point. So I'm just saying, hey, do your due diligence, decide yay or nay. And if it's towards the, let's do it, just make sure I would have every client sign off that if they don't want me to buy their some Bitcoin, make sure they sign a piece of paper saying you don't want me to do this for you.
Yeah, that's an
Wow.
interesting observation, Paul. I mean, and it's part of why I'm not retired. It's why I continue to just, grind and try to get the word out. Because I've always held the registered investment advisor in the highest of regard because of the disruption that they brought forward,
Right.
and the alignment of principles that they bring forward for clients. They do great work, and they offer that sitting on the same side of the table with the client, the people who are working hard to achieve their dreams and empower their families, and they provide just tremendous care along the way, along with expertise. And so what I would say is, I don't want to see that the disruptor create disrupt the the
The
disruptor, right?
disruptor.
I'd rather see an RIA look at what Bitcoin represents, which I think we all agree it's a disruptor, and say, I choose to embrace it and bring this disruption forward for my clients, and continue on as a healthy business, because now you're the trusted advisor, or you are the trusted advisor, and you continue to thrive and evolve and be the trusted advisor. Because I think what ends up happening, to your point, there's a 15-year track record that is, up and to the what do they say, Mark? Up and to the right. And it is undeniable, number one asset class. You can't deny that. And then the secondary piece is that you've got, a traditional system that has been built, and you can go back and look at the US dollar, and you have a 111-year track record going in the opposite direction, debasing the heck out of your clients' currencies.
Yeah.
And so those two things are powerful enough just to start getting into how do I think about this? What do I need to know about it? How do I continue my education around it? How do we integrate it into the firm? And more importantly, how do we bring it forward to our clients with the level of thoughtfulness that it really does require? And so, in my mind, a firm like OnRamp, we provide that educational support. We provide a vehicle that allows you true ownership assurances, not an ETF which doesn't. And to me, like, those are the things that we're trying to solve. Is making certain that advisors have a way or a path to be able to, one, play the role that they're asked to play, which is, to advise clients, do the due diligence, and earn a living, right, for the great advice and services that they provide. And so, kind of maybe that's my bridge to a broader conversation, which is, how are advisors going to differentiate in a sea of
Right.
sameness?
Right.
I think Bitcoin and Bitcoin education and integration into a broader portfolio is a significant differentiation, even 15 years into its existence.
Totally.
And I would also argue, not just how do they differentiate, but how do they really grow?
Yeah.
And we could sit here and spend another 30 minutes talking about the kegger, right?
Yeah.
You look at the kegger of Bitcoin in its worst performing any 4-year cycle, and you're at 25%, kegger. But if you look at Bitcoin, on a normal basis, I mean, you're probably up in the what, 56? I don't know. That number is just kind of sitting in my head, 56%, maybe 60. I heard somebody say 65. I got to
So,
do
Rich,
research there, but
Rich,
check me on
we're
that.
we're gonna
But
we're gonna do a
anyway,
CNN fact check on you on that. So
good.
the point on the growth, which I think Paul touched on and you just mentioned, is dead on, and we've seen that in Canada, where folks got involved in Bitcoin when my former firm brought the first spot fund, Bitcoin fund, and it was a lot of young folks who understood it, to Paul's point earlier, and they got involved in 2020, and they're now not, they're not cold calling clients anymore. They have a seat at the table in their firm because their assets have grown. Say it was only 5% of it.
Yeah.
Those assets have grown 10 to 12 times, 10 times from where they got in. So they just had to get their client in the door. And again, we don't know if that's going to happen again. I certainly think it is. I can't tell you that. I want you to make your own decision. But as you said, folks, the value proposition is well beyond the ETF. So that was a bridge that you talked about, Rich. As an advisor, understanding Bitcoin and why maybe the ETF limits it like a processed food, where the nutritional value of the blockchain does not flow through your client. And that is something that you as the RIA, if your client picks that up and they're able to see that happen over the next year or two, man, you are set for the next generation, I believe, because their kids sure as heck know that.
Hey, before I forget, Mark, I want you to address some of the statistics, the weighting, if you will, of Bitcoin. We're not asking advisors to perform due diligence and then, get a huge footprint of Bitcoin in each portfolio. We're just saying, if you don't have any exposure, that's how the disruption that you might experience would not be of the good kind. So, and you have some great data, I think, that speaks to just a very small position of Bitcoin based on its historical performance can really bring some nice extra gains inside of an investor's portfolio.
Thanks for that, Paul. We've done the classic 60-40 portfolio, which obviously disappointed in 22 and has been kind of lagging for reasons we can talk about later. But instead of disrupting everything, we said, how about if we just put a 3%? We messed around with 1, 3, 5, 10% allocations. And we said, how about if we put in, of those, the 3% allocation, Paul, really was a sweet spot. And we didn't just put it in there statically. We rebalanced it. which people often do in a 60-40. So if we took, say, the worst 5-year period recently, actually it's, I think on record, the worst 5-year period, December 22 to December 2000, December 17 to December 2022, you had 60% drawdowns of Bitcoin. So even if you put in 3% allocation at the very top at like 20,000 when Bitcoin fell to 3,000 between 17 and 19, and you rebalanced it all the way through when it went to 69,000 and then it fell again to 18. Like, it's a roller coaster ride. It would make you throw up if you had a lot of your assets in there, but we're not asking for that. Just give your advisor 3% and reallocate. That 3% allocation actually grew to be over 20% of the returns of that portfolio. It added to the portfolio because when it went up, you said, let's rebalance. And when it went down, you added to it. And the most important part is that Bitcoin zigged when the rest of the portfolio was zagging. It did not correlate as people often say it does. It has a very different return distribution. And most importantly is that if you looked at it as a drawdown for the regular 60-40 without any Bitcoin in it, it barely moved the max drawdown. It's like less than, I think, 50 or 60 basis points, Paul. And that is the number one measure an allocator looks at, because they cannot be in that position of not compounding tax-free returns. They want to be back up. So BlackRock did a dog whistle to that number two to that 3% number as well. Fidelity made it, hinted at it as well in the 3%. And there's a reason. It's almost like a low risk, best optimization entry point. It's a gateway allocation where you're not going to get, historically speaking, blowback from your client. It's so we'd love to speak more about that, but that's it. And we agree. And no other asset has the return profile of Bitcoin. That's why it happens. You can't leverage gold. You can't use a hedge fund portfolio. Nothing that we've seen gives you this. I have an opinion on the subject, as you can tell.
Yeah, no, you've got great data. It's all real, and that's what we hope the advisors that see this this cast, maybe take some of this to heart. And it doesn't take long to do the due diligence. They already have a process in place. It's just a different asset they're going to look at.
Yeah, so kind of before we shut down, just kind of thinking through growth. And, obviously just the return characteristics that Bitcoin has exhibited, is a way to continue to thrive and grow AUM through through those return characteristics. But one of the things that I, have had conversations with advisors is, look, if you have a good, strong foundation in your due diligence process, and you access Bitcoin correctly, and correctly for me means ownership assurances for your clients, that they could actually take possession of the Bitcoin at some point should they wish, and you can't do that with an ETF. But one of the things that it strikes me is you have what $2.5 trillion in digital assets today. Of which I think Bitcoin represents roughly 56% in terms of market dominance. And a lot of clients have Bitcoin. They went out and got it on their own, right? Because it wasn't an advice solution. They said, I want to participate. They saw it. They understood something, right? Something about Bitcoin spoke to them. Whether it be that it was, what it does from an energy, standpoint, and how it stabilizes grids, and maybe it's that, it's helping those who are, underbanked around the globe. Maybe that speaks to them, and they found their way to Bitcoin. Everybody finds their way to Bitcoin completely different, and that's a beautiful thing because it's such neutral money. Neutral sound money, I should really emphasize that. But one of the things that strikes me is advisors can't go get they can't compete for that 2.5 trillion if they, one, don't have a Bitcoin thesis. Two, they can't compete for it if they don't have the right custody set up. If they haven't thought through custodial implications. And by the way, a quick plug, we have recently released the evolution of Bitcoin custody paper, and anybody can go to onrampbitcoin.com and be able to download that. It's absolutely fantastic, quick read. I'm talking, 7 pages, something like that, but it's worthwhile. And where I'm going with this is if you come through your due diligence and you do develop a Bitcoin thesis and you do want to put in what 3% like Mark suggests, and then regularly rebalance that or whatever it might be, it becomes, what's the right vehicle? How do you ensure ownership assurances? How do you make certain that you are minimizing counterparty risk? How do you help improve the client's current situation, and get them to a better custodial arrangement so that they're not part of that 4 million coins that got lost forever, due to poor setups? And, I look at our solution in many respects, and I'm a homer here, full disclosure, but I look at our solution as a way for advisors to be able to grow and tap into those untapped markets and be able to say, look, you've got money sitting on an exchange. You've got money sitting in a hardware device. These are bearer assets. They require titling. They require proper registration. You need to have an inheritance plan built around it, right? This is an easy win to be able to go to clients and say, I have a way to help you, a way to help this holding that you really believe in. We too believe in it, and here's the way that you can do it, and we can integrate it into your financial plan, and let's move forward. So to me, I just look at what happens when the RIAs get this right. They get the thesis down.
Yeah.
They've done the due diligence, and now they go out and they start playing, and resolving bad setups for people, or inferior setups, maybe I'll just say.
Right. Yeah. So you just added a very important part to all this, but you just had me thinking. Somebody's going to interview an RA. They're not quite a client yet. A lot of times they're interviewing more than one RA, right?
Yeah.
And you could be the RA that's got this Bitcoin as part of a portfolio, a great custody solution like you guys offer. Anytime you can differentiate your story, right? What's the backdrop? What's our background? What do we do here? Again, the differentiating yourself from all the other RAs. And again, part of the success and the disrupting that they've done as an RA community begets a lot of RAs. So, you've got to have something that you're talking about that makes a lot of sense, that they're not going to hear from the RA down the street or across town.
Yep, that's right. I'll throw one last little interesting nugget at you, Paul, that I don't know if it will surprise you or not, but Jackson Michalik, who is our head of institutional sales at Onramp, great guy. Both he and I have been, fielding a ton of inquiries, and those inquiries are coming from traditional wirehouses. So Merrill Lynch, UBS, Wells Fargo, Morgan Stanley advisors, and they're calling us, and they're trying to figure out, okay, what are you doing? How do you do it? Why is it different? Right? We're having nice conversations with these folks. They're hamstrung, right?
Oh yeah,
they're hamstrung.
To figure out, how do I get out of here?
And their thesis is sound, right? So they've developed a thesis around Bitcoin. They're trying to figure out what this next solution is. I think honestly that this is going to be the next wave of wirehouse advisors going independent, either starting their own RIA or plugging into another RIA or going to a larger platform that will help them in that process. And so the question becomes, if you're in the game of trying to attract advisors
Yeah.
as an RIA and you don't have this product match or
Right.
this solution set, you're not going to be the one who's going to be talking to all of these people.
Right. Right. Well, you need to pick that one up offline because what I do is help make those connections.
Yeah, no doubt, and we will take that offline. But I find it fascinating, just the sheer volume of wirehouse advisors who are seeing the light and saying, I need to do something here. And the ETF, whether or not they allow them to solicit or not, that's not going to keep this crowd.
Right.
This crowd knows that they need to have a better solution,
Yeah.
to meet what their vision is.
So the ETF, the big problem with the ETF, it's like any ETF of any asset, it's just price exposure. If you don't hold it, have your keys in the case of Bitcoin, then you don't own it. You think you own it, but you really don't. You just have price exposure.
And there's a
and that's a good thing, by the way. I'm delighted that they're in this space.
But look at the trap. There's a cautionary tale about jumping, leaping before you look, with the folks that got into grayscale, which then they changed the rules and captured you, and people made a lot of money in it. And when the ETFs came out, even grayscale kept their fees high because they knew they trapped people in and didn't want to take tax realization. So the same thing here. Say Bitcoin does what we think it's going to do, let alone what other folks think, and which is multiples higher, and you get into a security, and then you can't. It limits your ability to move it or maybe borrow against it. Other solutions, like what Onramp offers, gives you the flexibility because you own it fully all the time. It's not a security. So that is, I think, something, as you said earlier, Paul, if someone comes in and says, okay, what do you offer me? And it's very different than the person who says, I got 6 ETFs that are really handsome. I can really put you in any one of them.
Yeah.
You're going to smear with this other offering.
Yeah.
Well, I know we're coming to the close. Paul, it is so enjoyable to have somebody like you who has such a broad perspective into the RIA world, and I would love to invite you back if you're willing to come in and just talk about themes that you're seeing from an RIA consulting standpoint, and spend a little bit more time there in the future. But before we sign off, let me just ask you, what's the magic number? What's the magic number?
100,000.
100,000.
I think it is. I think at 100, things changed in a lot of people's brains I think people pay attention to Bitcoin, and I probably fell into this camp without realizing they're paying attention to Bitcoin.
Yeah.
If that makes any sense.
It does.
Mark, what do you think? Magic number?
Yeah,
I agree.
I do agree, because then people will reassess, did I really miss it, or is this thing really going to have escape velocity, which obviously we think it already has escaped. I think 100,000 gets people's attention, because then at that number it is a $1.8 trillion asset, $1.7 trillion asset or so, and that puts it up at the 5th largest asset in the world. It's now 10th. So you can ignore all you want, but as it approaches the asset value of gold, maybe you want to reconsider.
Have you guys seen the statistic on the Bitcoin price? How every 4 years it adds a digit. So it started out single digit, double digit, triple digit.
Yeah.
Right.
Yeah.
And we're in that 6-digit.
We have a little saying that it's going to go from last cycle was SBF, that little ne'er-do-well, Sam Bankman-Fried, to now it's going to go to SVB, 6-figure Bitcoin. So we're going to have a little flip of the figures. And when people forget about that, the fault of the player, they're going to realize that this protocol just keeps marching on.
Yeah. Well, this has been a lot of fun. I think we could have, we could sit here, the three old guys with gray hair and
I'll take any
chop
color
up
hair.
Bitcoin
Right.
and yeah. Exactly. Anyway, we could continue on, but we just want to wish everybody a great week.
Yes.
We'll be doing next week on Tuesday because I believe we've got Labor Day. Do we not?
Yep.
Am I on? Yeah, that's right. So we'll do Wake Up Call on Tuesday. But I want to thank Paul for joining us today. If you are looking for someone to talk to about your business or you're considering an independent move, RIAPEX.com. But you can certainly hit Paul up on LinkedIn if that's an easier pathway for you.
Yeah. And thank you, Rich and Mark, for having me today. This has been really fun, and happy to, get back together with you guys anytime down the road and do it again.
Absolutely, Paul.
Love it. Awesome. Well, everybody have a great week, and thank you so much for joining us.
Take care, everybody.
All right.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that Onramp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.